Hello everyone, it's Davide here and welcome back to Learning Finance. In today's video guys, I want to talk about Baidu stock, so ticker symbol BIDU. Baidu, which is a Chinese tech stock that was born like a sort of Chinese Google, okay? So Baidu is well known in China because it's one of the main search engines and also other tools, but it became interesting over the last few months because they got involved in this autonomous driving market, okay, which it is a very hot, as you maybe know. China, it looks like that they are planning to go there as well, and Baidu is one of the main businesses, that probably the leading business in that scenario. That's why Baidu actually became very popular, mainly driven by autonomous driving and AI, and as we can see, the stock literally exploded. And I got many comments about Baidu. Anyway, the stock was probably overvalued, okay, in my opinion. Now it came back down mainly because of, as we can see, the Ark margin call, okay, the hedge fund meltdown. I don't know if you have followed the news. Those guys, they were too much on leverage, and Baidu was one of the stocks actually involved in this margin call issue. And obviously a sell-off happened. In my opinion, it's not just because of that, but also because it was overvalued. Anyway, now it came back to earth, so probably it makes more sense to talk about Baidu as a potential investment. And Cathie Wood, she's bullish on Baidu. She bought another 500k shares actually during this drop. We are gonna talk about that. We are gonna see the fair price and also some price targets, and then what I think about the stock. The only thing I ask you guys is please, an early like, it's very important. You help me to reach more people, is the only way to actually get noticed on YouTube, so I thank you for it. And subscribe to the channel so you don't miss any new updates. Let's begin. Alright guys, so when we think about Baidu, the first thing that we have to ask, obviously, what is Baidu? And when we take a look at the revenue divisions, we realize that Baidu Business is mainly divided in three parts. The first part, which is the 61% of their revenue, is the Baidu core and driven by marketing. So the revenue comes from marketing, which is obviously advertisement. And we can see that it is the biggest slice in the cake. Then still core business is this 12% over there, which is non-marketing revenue, which made everyone enthusiastic about Baidu, okay? The excitement comes from that 12%, which, as I'm gonna show you, it's where actually the autonomous driving business and the cloud is, okay, together with AI. And then we have this IQE, I think that's the pronunciation, I'm not sure about that. Anyway, it's a 27%, which is basically an entertainment platform. Now, what's the main problem about that? When we take a look at Baidu, this is from their last earnings release, actually we see that they have closed 16.41 billion, okay, over the 2020. Now, the core from Baidu, as we can see, the biggest slice, which is the online marketing revenue business. They have done 10.16 billion and the growth actually is negative, okay? 5% less year over year. The non-marketing revenue, which is the part that everyone got excited about, is the one that did 1.90 billion and increased 28%. The IQY business, so the entertainment platform, has done just a 2% year over year, okay, approaching 4.55 billion. So just from that, what we realize about Baidu is that just the 12% part of their business is actually growing at a high rate, okay, like usually tech stocks do, 28, 30%, while the rest is actually flat or negative. So when we take a look at their products, this is the marketing part, so the advertisement revenue division, we see that they have Baidu app, Baidu Search, as I told you, that's very popular in China. Baidu Feed, then we have another short video app. Baidu Postbar, Baidu Knows, this is like a sort of an app, you can ask questions. Then they have a Baidu Encyclopedia, Baidu Maps, all of those things. Obviously, I'm not gonna tell you in details because otherwise the video comes too long. Anyway, that is the marketing part of the business, okay, where they actually gain mainly because of advertisements and is not doing well, right? Their core business actually made everyone excited because of this. That's the new AI business and mainly incorporates three types of businesses. The first one is Dueros. This is something like, for example, Alexa for Amazon. Okay, so you have these voice assistants that people buy, they put in their homes. Okay, this kind of stuff, similar to Alexa from Amazon, or also the one sold by Google. Okay, similar to that. Then this is the major catalyst that everyone was happy about, Apollo. Apollo, which is actually their autonomous driving electric vehicles part of the business. This is a pretty recent one. Obviously, the government is also helping Baidu with this, so there is a lot of interest in actually Baidu being successful in creating the autonomous driving in China. And then we have the Baidu Cloud. Obviously, Baidu is working a lot with artificial intelligence. However, we have to remember that when we actually take a look at the numbers, even though it's growing at 28%, it's just the 12% of the business, okay? Everything else is actually flat or negative. So that's something to keep in mind when analyzing the stock. So in terms of fundamental analysis, guys, here I put the last 6 years. Now, when we take a look from actually 2009, okay, we see that the Baidu core, so the advertisement business, was doing pretty well. Look at that. Baidu actually witnessed a growth rate typical of a tech stock, so from 600 million to actually touch $10 billion in just basically 6 years. Okay, so that's what you want to see in a tech stock. However, since 2015, we see that the growth rate actually has slowed a lot. The growth rate on average has been 10.33% in the last 6 years. Now, if we avoid this huge spike of 28% in just 1 year, 2017, and the adjusted average is just 5.84%. When we take a look at the gross profit, another thing that I don't like to see is that over the last 6 years, actually it went down. Usually when a business continues to grow and expand, it should scale. But this is actually showing us the real issue that Baidu had, especially with their core marketing business. Now, what has changed that made everyone crazy about the stock is actually this new autonomous driving and AI business, right? So it's kind of like investing in a sort of a turnaround of Baidu, a sort of a reborn of this company. So this is what you're really looking for if you decide to invest in Baidu. Once again, the operating income, we see that it's kind of all over the places. Anyway, it didn't actually scale over time. The average 14.1%. Then what we realize is when we take a look at the net margins and the EBITDA, we see that Baidu, for example, look at that. This is 3.44 billion in net income, coming from an operating income of just 2.1. So Baidu, most of the times, they made money in terms of net income and cash flows with revenues that are not from their core businesses, okay, are not from the operating part of the business. So maybe they sold something, or maybe it was government grants. But the truth is that over the last 6 years, if we look at the net income, we kind of get fooled by them, but the reality is that the operating business, so the real business of Baidu, didn't do much well compared with all the tech stocks. However, I tried to take the margin, the average margins for the free cash flow to equity, and actually here is 31.72 for the last 6 years. However, in the valuation I've used 28% because I want to be more conservative. Now, when it comes to the valuation, actually I took the first 2 years, which are analysts' expectations. We see that the growth rate is expected to be 17% for 2021, 13% for 2022, and then I started to do the scenario analysis, okay? Scenario analysis, which is from 23 to 2025, and then as we can see, another 3 years from 2028. So 2 different growth rates. And I have done 3 different scenarios. The normal case, we have a 12% until 2025 and then a 8% until 2028. Now, what that means is that basically, as also the CEO of Baidu said in a Bloomberg interview, is that this non-marketing revenue part of the business, which is actually the only one which is growing, will overtake the other 2 divisions. Okay, so the growth rate of Baidu will be higher in the future because of that, and not just how it has been in the history, okay? So on average of 5.84%. This is why Baidu investment is like a sort of a turnaround, okay? A sort of a business which wasn't working before and now it's kind of reborning. This is what you have to believe if you buy the stock, okay? It is not a stock like Facebook, Amazon, Google, Netflix, whatever you have in mind. The growth has been consistent over the years. The expansions have been consistent. In this case, you have something that worked well for a while and then it went flat or negative. The idea is that it should take off again. Now, the requirements for the valuation took a rate of return of 14%, a perpetual growth rate of 3.50, because China actually is forecasted to grow at around 8 to 6% in the next couple of years. Obviously, here the scenario is until 2028, so at 3.50 can make sense. The normal case, 12 to 8% growth. What it gives us today is a fair value of the company of $223.52. Now, the bear case, actually, I put to 8 to 6%. Obviously, 2021 and 22 are fixed, okay, are the analysts' estimates, so I don't change them. And the fair value with that view is $198 per share. The requirements are still the same for all the scenarios. The bull case scenarios, I took 18% from 23 to 2025 and then 12% until 2028. The fair value of the company is $272.76 per share. Now, when we take the 3 of them here, probability, I put the normal case 50%, the bull case 20%, and the bear case 30%. Because consider the history of the company, I don't feel comfortable to actually put the bull case more likely than the bear case. Anyway, with that setup, we get an average fair price of 225.72 cents per share for Baidu stock. Now, if you are wondering what are the price targets here, I took 2025 as the normal case scenario, okay? So what we have done before, we have the revenues are estimated to be around 30.5 billion, the free cash flow 8.5 billion, then we have the shares today, the dilution, I put 0% because Baidu doesn't seems to actually dilute too much shareholders. Free cash flow per share of 24.81, okay, in 2025. I put a conservative free cash flow yield of 5%. That gives us a price target in 2025 of $496.23. Then the price to sales ratio, so another valuation, I just put 5, which if we take a look at the history of Baidu stock, actually, if you take from basically 2015 to now, we have that 5 is kind of like the average, okay, of what they have done. If you want to be less conservative, you can put, I don't know, for example, 6. However, I think that 5 makes sense for what Baidu has done. The price target is $443 per share. You do an average, it comes around $470 per share. Considering that the price today is 220, you should do a 2.1x return in 5 years. If here you want to be less conservative, I don't know, let's put 6, and what you have is a 2.33x return expected, okay, in 5 years. Now, clearly, according to this valuation, we see how the latest drop that we have seen on Baidu actually put the stock again in an interest area, okay, to buy it. Now, what do I think about Baidu stock? I will personally not buy Baidu stock, and the reason behind it, and it is just my opinion, okay, so maybe you are completely different from me, your idea is different, and that's fair enough. Leave me down a comment with your idea, but just my opinion is that when I buy a company, when I buy a stock, I don't like to see all this mess up that they have done, right? So starting with a type of business, then after a while it doesn't work. So changing the business and doing a lot of stuff, but not a single one of them is made in pure quality, in my opinion. Okay, so it's just my opinion, but personally, I do not invest in 50 companies. I invest in a maximum of 10 companies. And when I buy something, I want to make sure that their main plan, their core business is actually working, okay? So they do that, they grow as crazy, and then they continue to expand, they continue to scale and become more profitable and more profitable, like for example Google did, Facebook, Apple, all these kind of businesses. Then once you actually are successful in your core business, it is okay to expand and do other stuff. But the idea that Baidu gives me is that actually they have tried to do so many stuff that actually they got lost. And that's just the feeling that I have with this. Once again, as I told you, if you buy the stock, you are betting on a turnaround, okay? So the company that hasn't done well for 6 years and now they will try to do better in the future. So that's what you are buying. You're not buying a company that has grown consistently. You are not buying a company that has scaled consistently. You are actually buying a company which has been in kind of flat growth, a little bit of trouble over the last few years, and now they are trying to take off again. Personally, for my portfolio and my view, I don't like to invest in these kind of companies, especially as we have just seen that the hype behind it has already started. So you are not paying the bargain here, okay? You are paying the right price for it. And I think that, in my opinion, it's not the investment for me, but once again, just my idea. So I hope you find the video interesting, guys, and leave me a like and leave me a comment below. Tell me what's your opinion on Baidu stock. Subscribe to the channel, and as always, guys, have a wonderful day.